All right, good afternoon, everybody, to the next session of our ETF challenge. I hope everybody is well and having a great week so far. And I'm hoping that all of your trades are performing as well as can be in a very, very volatile market. Last week, I looked at some of the market indicators with regards to the local and the offshore markets, and it's certainly been a very, very interesting and volatile year so far. We are 2 months away from the end of the year, and I think for a lot of investors, 2023 will hopefully be a much better platform on which to start their picks. Right, just a quick check-in on the audio. I assume everybody can hear me loud and clear before I continue. Okay, thank you so much. Good afternoon, Jay Seema, and good afternoon to Dominique, Jordan, Melody, and Hat. Right, the next part of the competition in relation to the exchange-traded funds and the type of funds that you might have become affiliated to in this week's program, I thought it is prudent to have a look at what type of research aspects, okay, what type of research information would you find on the 4 ETFs that I chose last week as part of my balanced portfolio. If you have had a chance to listen to the recording or have a look at last week's presentation, you would have noticed that in last week I put forward some information with regards to the importance of diversification. And diversification in the form that we have got various risk profiles and we have got a number of exchange traded funds that we can choose from in each of those various risk profiles. Okay. Jordan, next week we will provide some information on how you can start tracking obviously your performance on your account overview on Easy Equities, on the Easy Equities platform. Remember that as per the POPI Act, Protection of People's Information, remember that each of you has got an account opened on the Easy Equities platform. And so therefore nobody else is able to access that information. However, next week we're going to provide a little bit more information on where you can track your performance on the Easy Equities platform, so that you can just get an idea of how your trades are performing. Okay. All right. So does that answer your question, Jordan? Okay. All right. So last week I presented an example of a balanced fund portfolio, and it was only it was fictitious in orientation. It was not to give students a set number of portfolios or ETFs to choose from, but just to give you an idea of what a typical balanced portfolio would comprise of. So let's have a deeper look at what aspects make up these funds, and also once you have researched and start researching these funds, what the various terminology mean. Right, on the aggressive portfolio or risk profile, the Satrix 40 ETF, and if you had to research a little bit deeper into what the investment mandate is on this particular fund, you would come to understand that this particular ETF tracks the value of the FTSE and the Johannesburg Stock Exchange Top 40 Index. In other words, top 40 companies within the trading platforms on both the FTSE and JSE. So remember that almost all of your ETFs are based on an index tracking fund method and provides investors with the price performance of therefore the FTSE and JSE Top 40 Companies Index. Top companies invested in this particular scenario are Anglo American, Naspers, FirstRand Limited, a couple of other companies that are worth a mention in the top 10 holdings of this particular exchange traded fund are the MTN Group, Standard Bank, Sasol, British American Tobacco, and Capitec Bank. Interesting to note that out of the top 10, there are 3 banks, okay, 3 financial institutions that are included in the top 10 holdings, which gives us an idea of the type of market that we're dealing with at this point in time. Asset allocation is 99.22% equity, so it's very aggressive in orientation with regards to the index tracker of these particular companies, and only 0.78% is allocated towards cash and the money market. So please remember that with regards to this particular fund, you would find this particular fund and all of the other funds that are relevant to this fund in the aggressive risk profile section of Easy Equities. Okay. As I move through some of the important information with regards to the slides that I put together, please would you just pop your questions. If you've got any questions or comments, please pop them into the chat box, and then we can further those for discussion purposes. Okay, all right. So the Satrix 40 ETF, remember that Satrix, just to confirm, is an intermediary or asset management company, all right? And there are a number of various options that you can choose from with regards to this portfolio. In fact, on the Easy Equities platform, there are 47 different aggressive exchange traded funds that you can choose from. Okay, so there is a consortium of exchange traded funds, and from the information that I've pulled on this particular fund, some of the important elements that you would want to have a look at: what is the composition? Okay, what is the composition of that particular ETF? In this case, it is the top 40 index. Okay, the top 40 companies that are basically tracking on an index performance on the FTSE and JSE. What type of companies are they invested in? So what is the composition of those companies in relation to resources, financials, and commodities? And obviously, what is the asset allocation? Okay, the asset allocation, remember that there are 4 general asset classes. One is equities, which is the most aggressive, followed by property, then bonds, and the least risky or least volatile is cash. Okay, right, let's have a look at the moderate aggressive exchange traded fund that is entitled the Core Shares. The one that I used for last week was the Core Shares S&P Global Dividend Aristocrats Exchange Traded Fund, a very, very flamboyant name for an exchange traded fund. And let's have a look how this differs from the Satrix Top 40 fund. So this particular fund will track the S&P Global Dividend Blend Index, all right? And it will have an allocation that represents a very neutral exposure to the countries invested in, such as Canada, Europe, Pan-Asia, and United States of America. So remember, the word global means, and this is part of your diversification exercise and strategy, you are able to choose local or global funds to make up your total investment portfolio. Asset allocation is split between 99.5% equities and 0.5% cash. And some of the major sectors that have got an allocation are industrials and financial markets. So what would the difference be, therefore, between a global fund of this nature and the previous Satrix top 40 fund. And basically you would look at the type of investment objective that the fund would cover. So in the Satrix top 40, remember, we're looking at a situation where it's tracking only two indexes, the FTSE and the JSE top 40 companies, whereas with the Core Shares Global Dividend Fund, it tracks not only a global exposure across a number of countries included on a couple of continents, but it also will track the top 10 constituents and a weighted average of those particular companies and indexes within those countries. So it is obviously much more diverse. It's obviously much more less aggressive in nature as your top 40 index, which only focuses on the performance of the top 40 performing companies. And what is interesting here is that if you look at the country weightings, for example, the United States has got the highest percentage contribution of 63.11%. And the next company that forms any part of mention is Japan, which is at 5.79%. So even though the global dividends are much more aligned to North America, it has got a certain affiliation also across the border to the other countries on the European continent. Okay, and Lily, the index tracking is, if you look at the various composition of index tracking means that that particular fund has chosen a consortium of companies and simply tracks the performance of all of those companies in one. Okay, so the index tracking is a consortium of companies where the performance is accumulated into one particular return, and that return will affect the value of the exchange traded fund. Okay, that's the simplest terms that I could put it into. All right. Okay, so a good question, Melody, because when we look at index tracking, another potential question that we could look at is what is the difference between an index tracker and a share tracker? So remember that an index will cover a consortium of companies, whereas shares, you could track the performance of those shares in one company. Okay, so those are basically affiliated to one company. For example, buying shares in the Adventech group. Okay, so that will be segmented to one company. All right. Okay, but guys, I know it's busy out there, but if you get an opportunity to do a little bit of research on these, on a couple of the funds, it will give you an indication of the different types of funds that you might want to look at, not only now, but also for future use. And remember that in this particular profile, Easy Equities offers you 27 different types of exchange traded funds. This is only one of them. And the reason why I just chose this one is because it is global and it's not only local in orientation. The third portfolio that I chose in last week's session was regards to the balanced portfolio. Excuse me for the top part being cut off, but it's called the One Invest Global Government Bond, One Invest Global Government Bond Index, ETF, which basically tracks the FTSE group of 7, also known as the G7 index, and tracks all of those particular countries in South African Rand. So the G7 stands for 7 countries which the index is based on, namely Canada, France, Germany, Italy, Japan, the United Kingdom, and the United States of America. So basically this particular global fund will track the bond indexes of all 7 of those countries. And if you look at most of those countries, they are all first world countries. So that's why this particular ETF is moderate in risk nature. And this index covers 855 of the market value of the World Government Bond Index. So remember that we're only looking at one particular asset class, which is bonds. So remember, we've got 4 of them. The previous 2 exchange traded funds, we had a 99% plus affiliation to equities. Here, we have got a 99.23% affiliation to global government bonds only. So there is very little, if any, there is very little, if any, exposure to equities and to properties, which obviously makes it more moderate in risk profiling. And the index is rebalanced monthly because of the global and the local affiliation. Even though there's only a local affiliation of 0.3% to cash and 0.4% to foreign cash, the government, the World Government Bond Index, needs to be realigned with the various factors that we looked at last week, all the volatility and all the different factors that are included in that as well. If you look at more information with regards to this particular fund, if you do research it more, what is interesting to note is that if we look at the holdings and the asset allocation, where exactly it would be aligned. If you look at the top 10 holdings, they include the United States Government Treasury, the United States Government Treasury notes, and the affiliated treasury notes of all of their reserve banks. Okay, so that's why the country allocation percentage would be just under 50% is basically invested in the United States as well. And that's because they've got the biggest bond market in the world. All right, so what is very important to understand is that when we are looking at diversification, do not go and put all of your funds into equities, especially in this volatile market. I have been referring to it on a regular basis, and I have been mentioning it is very important to diversify your portfolio across the equities, the bonds, and the cash market, so that where there is volatility in one asset class, it is basically rebalanced by the other asset classes. Okay, so as mentioned, this is a moderate, if you look on the Easy Equities platform, this is under the moderate risk profile selection of exchange traded funds. And there are 13 different exchange traded funds that you can choose from in this particular portfolio. And as mentioned last week, I would, in my personal view, I would definitely select at least a 25% allocation of my money, definitely to the moderate stable, simply because of the volatility in the markets. Okay. Right, and then the last and the most conservative of all of the funds is called, the one that I used last week is called the Core Shares Preference Share Exchange Traded Fund. And as the word suggests, this will only track the FTSE and JSE Preference Share Index, and it only therefore purchases securities. Now, securities, another word for securities or another term that is closely affiliated to securities, is also very much bonds, government and commercial bonds, which definitely makes it a little bit less volatile. And this particular index measures the performance of non-convertible floating rate perpetual preference shares. Now that is quite a mouthful, and some of you in your accounting studies will encounter a number of these particular terms, but let's just have a look at a few of them. The non-convertible means that that is a bond that is not able to have a fixed par value when the maturity date is reached. Floating rate means that it is able to be flexible in relation to the bond market rates that are be adjusted on a regular basis. Perpetual means that it is ongoing forever. In other words, those rates will have a perpetual or ongoing timeline. And preference shares, as one would kind of learn in your accounting studies, all of your preference shares have got, in other words, a preference with regards to the ownership of those shares and the dividends that need to be paid out with regards to those shares as well. Benefits of investing in this fund include the following. It is definitely a very tax efficient income distribution, cost effective, and the asset allocation for investors is definitely going to pull them more into a conservative to moderate timeline. And when markets are very, very volatile, it will save them and the performance of their funds as well. If we look a little bit deeper, over and above the information shared, and we look at the exchange traded fund document that you can download, all of the information, by the way, that I have downloaded, you are able to get this off the various websites of the investment companies. So in other words, CoreShares is an investment company that you can, get access to all of their, what we call a fund fact sheet. Okay, it's called the fund fact sheet. And if you input this information, it'll give you that information automatically. Okay, but a couple of more information with regards to the preference shares. Remember that as with all investments, there are certain risks with regards to this share. The first one is called an index tracking risk. So the ETF returns may not match the index returns. And also the second risk is that an investment in this particular fund involves risks similar to those to investing in any fund, such as the liquidity risk and capital risk. Remember, guys, that there is no guarantee that even if you put all of your money into this particular fund, that your capital is going to be secured at the end of the competition. So it's important just to note that there is still risk, even though it is very conservative. So under the conservative timeline, the number of funds that are available on this platform, Easy Equities, on the platform, there are only six particular ETFs that are available under that risk profile. But again, even though the returns might be quite low, it does stabilize during rocky time periods. Okay, all right, so that's just a deeper look at for those students that want to have a better understanding of what type of exchange traded fund they are investing in. Okay, very important to, as always, as with your studies, and even though we have got quite a short timeline for this particular competition, moving forward, remember one of the main objectives of this competition is to give you, all of you, a little bit of grounding as to what type of elements would you look at for future investing. Okay, and with everything there comes homework. So it's important to understand the dynamics of all of the investments that you'll be looking into the future. And again, the reason why we looked at exchange traded funds in this particular competition is that it's the easiest, arguably, to understand as an introduction. Melody, how do you minimize losses? Diversification. So sorry to sound like a broken record, but by diversifying your 100,000 Rand demo money, you will limit and minimize your losses. You could roll the dice, you can put all of your money into one particular fund and pretty much hope and pray for the best. But diversification, in other words, splitting your money across various risk profiles and splitting your money between local and global funds, for example, there is definitely going to be a chance that you can minimize your losses. Okay. All right. Are there any questions or any comments, guys? How are you guys finding the investment platform at this stage? Okay, you guys, how many trades have you performed at this stage? Have you guys still got some money left that you could trade?